Okay, I'm going to start with a viewer question on Osisko Royalties Limited, symbol OR on the TSX, trades around 25.50, market cap of 4.95 billion, just under 1% yield. What do they do? They're an intermediate precious metal royalty company which holds a North American focused portfolio of over 185 royalties, streams, and precious metal offtakes, including 20 producing assets. Osisko's portfolio is anchored by its cornerstone asset, a 3 to 5% net smelter return royalty on the Canadian Malartic Complex, one of Canada's largest gold operations. So the shares have performed well over the past year, up 39.79%. Having said that, gold it's have done better. It's actually underperformed gold, the shares of Osisko. Gold itself was up 45.35% over the past year. You can see gold here shown in blue and Osisko in yellow. Now, if we look over the past 5 years, Osisko has performed quite well, up 140.71%. This actually substantially outpaced the price of gold over that same time frame. Gold was up just around 89.19% over that 5-year time frame. Finally, if we look all time on Osisko here, you can see this is back to when it listed in June around 2014, the $15 to $16 range. The stock is up just 67% in nearly 11 years, which is really not the most stellar return. All right, let's look at the 2024 financial highlights from Osisko. Gold production and gold equivalent ounces, or GEOs, earned essentially did 80,000 gold equivalent ounces. That was down from the same period last year. Record revenues from royalties and streams, you can see there, and record cash flow from operations came in at 159.9 million, up from 138.4 million. Net earnings were up to a gain of 9 cents per share from a loss in the same period last year. And adjusted earnings came at 52 cents per share from about 40 cents in 2023. And it made net repayments of about 49.7 million under its revolving credit facility. Let's look at the balance sheet here. Cash of around 59.1 million and debt of 93.9 million as at December 31st, 2024. As a pretty decent balance sheet. Solid access to credit of up to 615 million with only 135 million drawn. Let's look at the growth outlook from this company. Osisko provided 2025 guidance of 80 to 88,000 GEOs with a cash margin of approximately 97%. The updated 5-year outlook through 2029 reflects a reduced delivery compared to prior projections due to the absence of its Eagle Mine contributions. Growth will instead be fueled by expansion at Dalgaranga, Windfall, Hermosa, and Marimaca. That's how I believe we pronounce that. Management highlighted the back half weighting of 2025 GEO deliveries with approximately 55 expected in Q3 and Q4. The company also remarked in its conference call that the slope of the delivery of gold equivalent growth in 2025 is expected to be less steep than previously anticipated due to adjustments at key assets such as its Canadian Malartic and Mantos Blancos streams. Now, we can look at, here's a graph of the growth over the course of the year. We can see here, or the next 5 to 10 years plus. We can see here the guidance for the next year, the outlook for 2029, and the near-term and long-term expansion opportunities for Osisko. Let's quickly look at the valuations here. 2024 price to cash flow is 22.8. The 2025 expected price to cash flow is about 21.3 times. And the adjusted PE based on what they expect in adjusted earnings for 2025 is about 27.48. Put that next to a peer, although larger and a higher quality business. Franco-Nevada trades at about 43.42 times this year's expected adjusted earnings. I would say it trades, you could say that Osisko trades at a discount, but I would consider Franco-Nevada to be a higher quality, larger business that is delivered consistently over time. So there is a reason for its premium valuation. Now, conclusion here quickly in the royalty slash streaming space. Osisko trades well below what we call the big three companies. Its current it trades at about 1.5 times net asset value, despite having a high quality North American centric asset base. Solid optionality in the company's development stage assets. There's also high quality of its flagship assets, and those would be the Canadian Malartic and Mantos Blancos royalty streams they have. Now, given, however, the average growth that we see here, valuations that currently look fair. For us, we have in our coverage, because we always put this company against, or any company that we're looking at against other companies that we can gain exposure to gold, for example. We have higher leverage and less risk exposure to gold at better prices in coverage currently than Osisko. So we continue to monitor this company. All right, that finishes off my presentation on that. Any comments, gentlemen?
I mean, it's such a hefty valuation in that space, right? Even at 22 times cash flow, that's definitely not cheap. But then you look at peers like Franklin up in the 40s times cash flow. Obviously, a big premium for that space, getting the exposure to gold. But you also said as well, Osisko underperformed gold.
Yeah, I mean, it underperformed last year, outperformed 5 years, but if you go back all time, it's significantly underperformed over the past, say, 11 years where gold was. So you should be getting leverage to the price of gold in an asset like this. And if it doesn't outperform over a 10, 11-year period, there are some definite concerns there for me. And its dividend, it's not like you're paying a massive dividend. It's under 1% right now. So, if even if we factor in the dividend, it's not close to outperforming gold over the last 10, 11 years. So yeah, you want it to outperform. And the thing is, like, for example, like we have a company that's given a lower risk exposure to gold, like a low risk. I mean, streamers and royalties are relatively lower risk. They can spend their way into bankruptcy. I've seen it happen before, but yeah, we've had a company that's gone up 250% over the past 5 years, which has crushed both of those companies. Plus, it's paid a far higher dividend. So there are other ways to gain exposure to gold. And we had a company that drills for these companies that went up 95% over the past year. So again, these gold was up 40 something percent. This company up 39. But that company crushes both those companies. So there are other ways to gain exposure to gold that isn't just buying a gold miner that has all the gold mine risk, the price risk, and yet you gain better exposure with less risk. And I would, the driller we bought last year, and the other company is a miller, driller / and miller. So they rhyme. So that makes them good. No, but anyways, they're good companies, good exposure to gold, and a different way of doing it than most people do.
Yeah, I wonder as well, just like, for demand or their, potential pipeline of streams. Like, I wonder, if it is increasing just with the tougher financing market that we're seeing out there for juniors. Again, I don't really know exactly, are these a lot of, pre-mine developed plans that they're, getting these royalties with? Yes, it is. Yeah. So I wonder,
I meant I was agreeing with you that there may be an opportunity. The only thing, I think that high quality, like a lot of the juniors that aren't getting funded, I think we talked about this last week. I did a little soapbox, right? I think those are the real exploration companies that are far a ways away. I think if you had an actual project that you'd proven out, I think you can get funded right now. Maybe there is more competitive markets, right? So a royalty company is in a better position. But yeah, I mean, it is a good thought that, they could be in a better position. We've looked at like Sandstorm recently and a couple of the others, Royal Gold and Franco-Nevada. So there's some interest there, but they are certainly trading at premium valuations. And, it's hard to pay up when we do have other options. That's what I was trying to get into. There are other options that gain exposure to gold, have been outperforming even the streamers and the gold miners. consistently with less risk, that's what we're opting for right now.